Here's how Elon Musk makes money tax-free. He doesn't get paid in cash. Maybe he does a little. He'll pay some tax on that. He gets paid in shares. What kind of shares are we talking about? Well, like Tesla and SpaceX or whatever. Stock options are not taxable. They're not even anything. They're just a piece of paper. And until you exercise the stock options, you get stocks, then that's potentially taxable, but not before. If you exercise the stock options higher than the value of the stock option, you get taxed. What am I talking about? Well, let's say Elon Musk gets Tesla stock for $100 a share. And then he exercises his stock someday when it's $110 a share. He's got to pay tax on the difference between the $100 option and the actual exercise at $110. $10 difference. Not bad. If he exercises his shares when the value are below the exercise price, $90 a share, he gets to take a capital loss, which means it comes off the money that he was getting paid in cash, tax deduction. However many billions of dollars they're worth, he doesn't pay tax on that. Not unless he sells them. Why would he sell them? Well, you're like, well, wait a minute. You can't take stocks to Ralph's or Kroger and go get groceries. How's he doing that? Well, he doesn't have to. He takes his stocks to a nice bank, and the bank goes, oh, hello, Mr. Musk. We love your shares. We'll use them as collateral on a loan that we'll give you that's at such a low interest rate that it's safer and way cheaper for us to give you a loan on billions of dollars of value that you can then use to pay your groceries than it is for you to sell the shares, because the tax on those shares is going to be really, really high. The shares are never sold, given to the bank. He got them at a nice capital loss, and now he gets all this money that he never has to pay back. Well, wait a minute, then how is that a legitimate loan if he never has to pay it back? Well, he doesn't, because with some of that money, he sets up an insurance policy. If he died, the loans get paid back. And if the value of the shares ever fell down too low, the bank would just liquidate the shares and take the money back anyway. He wins, and nowhere here does he pay any tax.